The first level begins with a negative balance. You open the banking app and the number on your screen has a minus sign in front of it. You stare at it for a few seconds, almost hoping it will correct itself if you keep looking. But the number does not move, because the system has already made its decision. You overdrafted by $4. Just $4. Not a luxury purchase, not a reckless night out, not some big mistake you can clearly blame yourself for. It was a coffee charge you forgot was scheduled to hit. But the bank does not care whether it was an accident, a small mistake, or the result of a bad week. The bank only cares about the math, and according to the math, you went below zero. Then the fee appears on the screen. $35. Added instantly, like punishment has been automated. That is the strange penalty of being broke. The moment you do not have enough money, the system charges you more money. The fee is bigger than the mistake that caused it, and somehow, everyone treats that as normal. You look at the screen, and what you feel is not even anger at first. It is exhaustion. A kind of tired that does not come from one bad charge, but from knowing every small mistake becomes expensive when you are already close to the edge. You are not shocked anymore. You are just worn down. Then another transaction goes through. A $7 subscription you forgot to cancel hits the account. The system sees that you are already negative and charges you another $35 fee. Now you owe $77 to a bank that first punished you $35 for being short by 4. You try to call them. The hold music repeats until it starts to feel like part of the punishment. When someone finally answers, they read from a script and tell you the fees cannot be reversed at this time. You ask for a manager, and they say someone will call back within 48 hours. Nobody calls back. The next morning, your rent payment fails. The landlord adds a $75 late fee, and your phone bill bounces with another $25 charge. The $4 problem has now become a $200 problem, growing in directions you never approved. You skip lunch on Wednesday, but not because you are trying to be disciplined. You skip it because the account will not allow anything else. You walk past the place you normally eat and keep walking like you were never headed there. That kind of acting becomes automatic when you have done it enough times. A coworker asks if you want to grab food after work. You say you already ate. You did not. But hunger at this level is not just physical. It is quiet, hidden, and practiced. You learn how to look full when you are not. You learn how to smile at invitations you cannot afford. You learn how to decline without explaining, because explaining makes the poverty feel louder. Eventually, the performance becomes part of your routine. On Friday, you walk into the branch. The teller looks at her screen, and you watch her face change in a way you have seen before. It is not anger, and it is not pity. It is something colder than both. In that moment, you stop being a person on her screen. You become a flag, a category, a risk score wearing shoes. You can feel it happen without anyone saying anything cruel. That is what makes it worse. You leave without saying everything you came to say. Somewhere between the $4 overdraft, the unreturned phone call, the failed rent payment, and the tired look from the teller, something in you changes. You no longer feel like a customer. You feel like a problem the bank is processing. Then comes the $200 level. You are not negative anymore. You pulled the account back above zero, and it took 20 hours of overtime just to keep $200 positive for 1 week. You did it, but nobody clapped, nobody noticed, and nothing in your life suddenly became easier. The bank notices, but not in the way you wish it would. A maintenance fee hits the account anyway. $12, sometimes $15, quietly withdrawn like it has every right to be there. The minimum balance to avoid it is $1,500. You do not have $1,500, so the fee stays. You are paying a bank to hold the little money you barely have. You log in and see it disappear overnight with no warning, no apology, and no explanation. The system does not explain itself. It simply executes. You apply for a credit card because you are trying to build some kind of financial backup. They offer you a secured card. That means you have to give them $300 of your own money so they can lend it back to you and charge you 24% interest for the privilege. You read the offer twice because it feels like a joke written by someone who has never been broke. They want collateral from you to extend credit from your own pocket. You do not take the offer because giving up $300 feels impossible. But that decision has consequences. When your tire blows on a Tuesday morning, you have no card to put it on. You ride the bus to work and arrive 3 hours late. Your manager does not fire you. He just looks at you longer than usual. You go back to the branch to ask about the maintenance fee. The teller is helping the customer in front of you, smiling and asking about their kids. When you step up, the smile changes into something professional and trained. The warmth leaves the room, even though the words remain polite. She processes your request in 40 seconds. She does not ask if there is anything else. She does not tell you to have a nice day. The next person walks up, and the smile returns. You walk toward the door, feeling something you have never fully been able to name. You were not insulted, and you were not refused service. You were simply moved through, like luggage on a belt. At $200, the bank does not really see you as a customer. In truth, the bank barely sees you at all. You exist on their books, but you do not exist in their attention. And that kind of invisibility becomes its own kind of pressure. Click below description. Then the account reaches $2,000. Something shifts, but not in the way people imagine. It is not just the number that changes. It is the way the system begins to look at you. Your direct deposit now hits every 2 weeks. $1,600 after taxes, consistent and predictable. For 6 months, that pattern continues. And that pattern becomes the only part of you the bank cares about. Not your stress, not your history, and not the nights you skipped meals. Not the fees that pushed you deeper when you were already struggling. The system sees consistency, and suddenly, it responds differently. The maintenance fee disappears. You did not ask for it. You did not call or beg anyone to reverse it. The system saw your direct deposit pattern and waived the fee automatically. The first time it happens, you check the account 3 times to make sure. The same fee that drained your account for years simply stops existing. Nothing about you changed overnight. Your behavior just started matching a profile that earns the bank money. So the bank lets you keep more of yours. Then the credit card offers begin arriving. Real ones this time. Not secured cards asking you to hand over cash first. Actual credit cards with $2,000 limits and 22% interest. The same institution that would not approve you 8 months ago is now mailing envelopes with your name printed in metallic ink. Pre-approved. That word feels strange, like the system decided you became someone else. But you did not become someone else. The number changed, and the bank adjusted its opinion. You apply for one card, and the approval comes in 90 seconds. The notification feels almost unreal. The same system that ignored you at $200 now says yes at $2,000. You walk into the branch, and the teller says good morning before you reach the counter. It is not the warm smile she gives wealthier customers, but it is not the silence you received at $200 either. It sits somewhere in between. Recognition without warmth, service without effort. This is the middle ground where most people live. You are no longer invisible. You are not respected either. You are simply useful enough for the system to sell things to you. You apply for a small loan, $5,000 for car repairs. This time, the process works almost exactly the way the commercials always made it sound. Approved in 48 hours. The interest rate is 11%. Not great, not terrible, but at least the door opened. That alone feels like progress. You realize something nobody tells you clearly enough. The bank does not care who you are. The bank cares what your account looks like. At $2,000, your account looks like something that can be monetized. You are not invisible anymore, but you are not valued in the human sense. You are profitable. And once you are profitable, the system starts speaking to you differently. Then comes $15,000. You log into the app one morning and notice that your credit limit changed. $4,000 became $9,500. You did not ask for it, and you did not apply. The bank simply decided you were worth more rope. The next morning, you get a call. Not an automated message, a real person. Your bank has assigned you a relationship banker. He says his name twice and gives you a direct line. He asks about your goals, your timeline, and your savings. He wants to schedule a 15-minute review. The same institution that put you on hold for 40 minutes when you had $200 now calls you first thing on a Tuesday. That call tells you everything without saying it directly. Your next loan comes with a lower interest rate. You buy a used car, and the dealer pulls your credit. The rate that would have been 11% at $2,000 is now 6.8% at $15,000. The price of money has become cheaper for you. Not because you negotiated harder. Not because you suddenly became smarter. Not because the bank discovered your character. It got cheaper because you stopped looking like a risk. Then a $32 fee appears on your statement. Before, that would have meant a phone call, hold music, a script, and maybe nothing at the end. Now you email your banker. 3 hours later, it is reversed. No form, no phone tree, no script. Just a reply that says, taken care of. The same fees that used to drain your account are now optional. The bank did not become kinder. The system did not change. Your tier changed. You start receiving emails with your name spelled correctly. Subject lines include your first name. Small touches appear, and personalization enters the relationship. The bank is courting you now, but not aggressively. It is subtle, almost invisible if you are not paying attention. It is the way someone treats a person they do not want to lose. That is when you realize something that was hidden at every level below this one. The bank was not necessarily trying to be mean when you were broke. It was indifferent. And indifference at scale can feel exactly like cruelty. You were not invested in, you were invested for. At $80,000, the language changes again. Now the bank calls you a preferred client. The phrase appears on your statements, on the welcome screen when you log in, and in the email signature of the man handling your account. You did not earn the title in any emotional or moral sense. The number earned it for you. Your relationship banker becomes a real person now. His name is David, and he remembers that you have a sister in Chicago because you mentioned it once, 9 months ago. He emails you on your birthday. Not automated, but written. That detail is not an accident. It is training. The bank teaches people like David to remember small things because small things keep accounts. Warmth becomes a retention strategy. When you walk into the branch, someone stands up to greet you. Not the teller, but someone with a nameplate and an office. They guide you past the rope line where everyone else waits. It is the same line you stood in when you had $200. Back then, you did not think of it as a rope line. You only knew you were waiting. Now, you are being guided around it, and the difference feels quiet but unmistakable. A pre-approval letter arrives in the mail, not for a credit card, but for a $400,000 mortgage. The bank has decided what you can afford before you have even decided to buy a house. They want the loan before you choose the property. The price of money is no longer something you chase. It is something offered to you. That change feels powerful, but also strange. Then a competitor bank calls. They offer to match your rates and beat your savings tier. You mention this to David, almost casually. He calls back within an hour with a counteroffer. The institution that once ignored you is now competing to keep you. At $80,000, the bank does not merely see you as preferred, it sees you as worth defending, and that is a very different kind of attention. Click below description. At $500,000, the bank stops being a place you visit. It becomes a service that comes to you. David does not email as much anymore. David calls. And when he calls, he is not asking how you are in a casual way. He is asking when you would like to meet his colleague who handles wealth management. The colleague drives to your office, not the other way around. He brings printed reports in a leather folder. He asks about your goals, your timeline, your tax structure, and your estate plans. The conversation lasts 90 minutes. At the end, he does not try to sell you anything directly. He simply leaves a card and says he will send a follow-up. The selling already happened. You just did not notice it. At this level, you are no longer being offered products. You are being consulted. That difference matters. A product is something the bank wants you to buy once. A consultation is something the bank wants you to need repeatedly. And needing them over time is worth far more than buying from them once. That is why the tone becomes softer. The strategy becomes slower. One day, a wire transfer freezes. At lower levels, this would have meant 3 hours, 4 transfers, hold music, and someone asking you to repeat information you already gave twice. Now someone answers on the second ring. No script, no loop, no delay. The problem is fixed in the same conversation. You almost do not know what to do with that kind of efficiency. It feels like the bank always had the ability to work this way. It just did not use that ability for you before. Then you attend a private dinner hosted by the bank. 8 clients, a guest speaker, and a view of the city you have never seen from that angle. Nobody talks about money the entire night. Because at that level, money is not the topic. Money is the table. You are not a customer at $500,000. You are an asset they protect. The bank is no longer simply holding your money. It is protecting its relationship with your money. At $5 million, the phrase becomes private banking. It sounds similar to wealth management, but it is not the same. Wealth management is a service. Private banking is a relationship. And relationships at that level do not merely follow rules. They negotiate them. You do not have a regular banker anymore. You have a private banker. That title means something specific inside the institution. He manages fewer than 20 accounts, and yours is one of them. He knows your children's names. He knows about the foundation you once mentioned over coffee. He remembers conversations that felt casual when you said them. But at this level, casual details are part of the map. Your mortgage rate is not published, it is negotiated. The minimum investment on a private deal is waived because the relationship justifies it. Paperwork that takes a normal customer 2 weeks gets handled in 48 hours because someone was told whose account it was. You walk into a branch you have never visited before, and they know your name before you sign anything. A banker you have never met stands up to introduce himself. The system has flagged you across locations, not because you are famous, but because of your position. You exist inside a database that prioritizes you before you ask. You sit in a conference room with no logo on the door. The table is one solid piece of wood. The deal being discussed is a private investment that will never appear in a public brochure. The room exists because clients like you exist. That is when you understand what access really means. It is not only about having more options, it is about entering rooms that were invisible from the outside. The bank does not simply follow rules at $5 million. The bank bends them for you. At $25 million, you no longer have a banker in the ordinary sense. You have a relationship. And the difference between those two words is the difference between this level and every level below it. A banker can be replaced. A relationship is tracked, defended, and measured. Your relationship is now a named line item in someone's performance review. Losing you would matter to careers. The institution does not merely compete to keep you. It organizes itself around not losing you. There are people inside the bank whose work partially exists because your account exists. They may not think of it that way, and you may not think of it that way, but the math is real. The deals are no longer menus or brochures, they are bespoke. Sentences are written for one client. The interest rate on a loan is negotiated in a phone call. The terms of an investment are drafted around your timeline. You do not apply for things at $25 million. Things apply for you. Opportunities are shaped before they are placed in front of you. Investments reach you before they become widely available. Deals are structured around your possible participation before you have even agreed to participate. But the real shift is not access. The real shift is influence. The bank no longer only serves you. The bank consults you. The chief investment officer may ask for your view on emerging markets. The head of private banking may fly out to ask what kind of products the next tier of clients should expect. You are now shaping the institution that once charged you $35 for being broke. That is the full circle. The same system that treated you like a problem when you were short $4 now treats your opinion like market intelligence. The person did not change as much as the balance did. Somewhere right now, someone is looking at a minus sign in front of their account balance. They overdrafted by $4. Maybe it was coffee, maybe it was a forgotten subscription, but the detail barely matters. The system only sees the math. The fee hits within the hour, $35. They stare at the screen and feel something that is not quite anger. Just tired. They try to call, but the hold music loops. When someone finally answers, the voice reads from a script. The fees cannot be reversed at this time. They do not know yet that the system is not broken. It is working exactly the way it was built to work. The same institution that may one day fly someone across the country to ask their opinion is currently charging them for not having enough. That is the uncomfortable truth. The bank does not become a different creature at every level. It simply reveals a different face, depending on what is next to your name. You are the same person at every balance. -$4, $200, $2,000, $15,000, $80,000, $500,000, $5 million, or $25 million. Your memories are still yours, and your character is still yours. But the bank does not measure your humanity first. It measures your balance, your pattern, your risk, your profitability, your potential, and eventually, your influence. Then it decides what version of service you deserve. Not because it knows who you are, but because it knows what you are worth to the institution. That is the part most people feel before they can explain it. They feel the shift in the teller's smile. They feel the difference between a script and a direct line. They feel the distance between being processed and being protected. Once you have seen the whole ladder, you cannot unsee it. The bank does not change at every level. The rules do not suddenly become fairer because the institution became kinder. The bank simply reveals what it always was. Click below description. At the bottom, it charges you for being short. In the middle, it sells to you because you are useful. Near the top, it protects you because losing you would cost too much. And at the highest levels, it does not just serve you anymore, it listens.